So here we are, Thursday, the 12th of March. This is the third update in terms of what's going on in the markets. It seems like every day there's a different headline about oil going up, oil going down, and how that is going to pan out. Only this morning there's talk of oil hitting $200 a barrel, which is a frightening prospect. However, we remain of the view that unless you have a contract due imminently, and by imminently I'm really talking probably about the next 3 months, there is real value in taking time to consider your options. Now we absolutely have some clients who, although they have contracts due later this year and in 2027, they are still seeing fairly cost neutral or cost down positions in some instances. Now, whilst from a market perspective, we might say there may be value in holding, we come back to that position about where does their risk sit? And if their primary objective is to secure cost neutrality or cost down position, then then it would be a very sensible decision for them to lock out contracts now. And I would just encourage all businesses to take that view in terms of, quite often we get asked about what's going to happen with the market, and very often I'll say, I do not have a crystal ball. And it comes back to that point about what does the number mean for you now as a business? And if we're holding off signing contracts, which absolutely might be the right thing to do, what are we holding off for, and how prepared are we for it to go the same way against you, and how are you going to treat them? So quite often my time and the team's time is spent to some degree challenging people's decision making and thought process to ensure that they are thinking about upside and downside risk and managing that properly. And as ever, we're more than happy to have conversations with people about that.